Hey everyone, Lindsey with HarQuin Bookkeeping. We are going through um, your P&L. Last time we went through what do expenses represent. I know on the outside that might not look like such an important thing to review. However, I always get questions on why things are put in certain places and what do they represent, because they might mean different things to me than to you. So it makes sure we're all on the same page and what should go there and what shouldn't go there. So today we are going to review how to run reports and what they mean. This is our last week on the P&L, but I want to show you how to pull reports that are meaningful and that you can actually use them as a tool. So using them as a tool is important, because what is data unless you make it a useful thing? You know, most of us, I would challenge any of us not to be just doing bookkeeping for tax purposes, but to also be doing bookkeeping so that you can use the data to make changes, to see how you're doing, maybe raise your prices to see if you're charging enough, if you're overpaying for employees, yada, 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 all that stuff. So let's dig in. So I will tell you that most of the reports you'll see here, you'll find on QuickBooks Online. However, as I've said in the past, QuickBooks Online is not as robust as the desktop version. Our clients have access to this for free, the desktop version online for free, but QuickBooks Online has a lot of them. Some of them they'll put into higher tiers, but there are ways around it. For instance, we're going to be running the profit and loss detail. Unfortunately, most of the QuickBooks Online subscriptions do not contain the profit and loss detail. So there is a way around it. You would just run the profit and loss statement. I'll just do it here so you can see. Just put last fiscal year. And then you would just go down to the end. Make it smaller. And then you would just double click this number right here. It gives you the same report as I'm about to show you. So that is your workaround when you're on QuickBooks Online and locked into their limited reports. If you ever need a report that I'm showing you here that you can access on QuickBooks Online, let me know and I can try to help you do a workaround. Sometimes you just have to finagle. And like, I don't know if I've said recently, but I'm a QuickBooks Pro Advisor. I'm an advanced Pro Advisor and have been for over 10 years. And I know how to finagle things. I'm not good at it. So, okay. So the first report we're going to go over is the profit and loss detail. I briefly alluded to it. Sorry, I took these in the way. Profit and loss detail. Let's see, last fiscal year. I briefly alluded to it. I'm not moving my face down with help. Okay, I briefly alluded to it last week or last session, going over like how do you know numbers are in here. So the profit and loss detail is really how you see if you're being accurate at all. So you might see a number on your P&L and be like, man, what does that mean? Like, what does that represent? So let's say last fiscal year. Like, man, I really don't think I made 178,000, or I don't really believe I spent 10,000. Even in QuickBooks Online, you can double click right here and it shows you every transaction that made that number up. So that is where the numbers are being generated from. So we like to run the profit and loss detail. We actually send this to our clients to review so they can, on a monthly basis, even at the end of the year, fiscal year, they review to make sure things are in the right buckets. A lot of times our clients will say, hey, Amazon always do this or that. But sometimes there might be a weird Amazon that you bought it just for an event that you forgot to tell us. Or it might be personal, that you accidentally ran through personal, and you would remember where your bookkeeper would not. So this is your chance to just make sure things are settling well with you. Like, I believe everything's in the right category, yada, yada, yada. So that is what we're doing here. So this is the profit and loss details. So it's going to show us all income accounts, all cost of goods sold, and all expense accounts. So first we have our income. So those are our Shopify entries that we went over in video 1. Where does that data come from? So when we get to, well, I would say this before I move on. I probably already touched on this too, but I'd like to reiterate it because it's really important. See how all my entries here in sales are sales receipts? If you have a transaction type that's a deposit or an expense, there's a chance it's miscategorized because we want our sales to only be coming from the sales receipt. So if it comes from any other place, it's probably in the wrong spot. So that is a way to double check for your accuracy. Okay, so I'm going to go down to cost of goods sold. So we're starting with job supplies. Now here's a little trick to make it easy in your eyes, okay? Because all these vendors kind of blend through. You want to sort by name. QuickBooks Online does this too. That way it groups vendors together so you can easily see when something sticks out. For instance, if we're going through this, we would look and say, you know, if we saw Chipotle in automotive, we would know it's wrong. It'd stick out like a sore thumb. Especially if we saw AutoZone and then Chipotle. Be like, you know, clearly that doesn't fit. There's only one of them in here. Something's wrong. I will warn you that QuickBooks Online especially is notorious for allowing you to enter data without vendor names. As you can see here, there's zero way you're going to know something's miscategorized if you don't put a vendor name on it. So that is extremely important. I know it says optional on QuickBooks Online when you're doing the bank feed. It's not optional. If you want to pay someone to go back and add that data, or if you ever get audited and you have to go back and add that data, you're going to be very upset with yourself. It's just so easy to put it on the front end. Don't put it off. It gets exceptionally hairy when it comes to 1099 season. Vendors or transactions paying for stuff without vendor names won't show up on your 1099 report and therefore will make your 1099s inaccurate. So please be aware that even though QuickBooks Online says it's optional, it's not. I'm saying it's not. And all your accountants will say it's not. Because we can't verify that things are actually coded correctly unless we see a vendor name. So I just want to put that on your radar. So right here, so this is a memo. In case there's a special reason why this transaction's in here, you can put a memo so that it reminds you, like, what in the world? Amazon always goes to office supplies. Why in the world is that there? Like, oh yeah, that's that time I bought labels or tissue paper from Amazon. It reminds you because a year from now you might not remember what you bought. So please feel free to put memos in. On this right column, on the one I'm pointing to right now, is the split. What that means is what account did it hit? What account did it come out of? So obviously we have a Federal Credit Union checking account here. We have a Chase credit card here. And we have members draw. What this means is that the transaction actually hit the client's personal bank account. And this is them recording it to get credit for it. You know, when a lot of businesses first start, they accidentally use their personal account, which I recommend you don't do. But I know that you have to at the very, very beginning. This is them getting credit for it. So it's entered through a general journal entry. All right, so this is job supplies. We've got Hobby Lobby, a lot of decorations. For decorations, you could either put it here or under job supplies, or make it a decor and fixtures account. It's a preference issue. It's not a one way is right, one other way is wrong. But see how easy it is to look at this when it's all grouped together. Now here is a perfect example right here where there's no vendor or a memo. I have no idea if that is categorized correctly because there's no vendor name or memo. I recommend you don't do that at all. You will not be happy with yourself when it comes down to it. All right. I think I skipped past some fees here, but we have our comment sold fees. So if I'm going through PayPal and then I see a check to Walmart and PayPal fees, I know it's wrong. It just is illogical. So scrolling through here. Okay, purchases for resale. This one is okay not to have not to have a name, because that's just the inventory adjustment we went over earlier. And then here are all the vendors. So I can easily see, yep, that's right, that looks good. Looks good. And this is where you're going to find when something is miscategorized, because you're going to know your vendors better than anyone. We have over 50 bookkeepers on our team, and we deal with lots of boutiques, clearly. But there is going to be a time every now and then where you buy something from a vendor that's normally this category that's now this other category. So just keep that on your radar. It's not necessarily a mistake. It's, where you have to update something. So I'll give you an example on how you would update something if you found something in the wrong category. So this is advertising. We got bank fees. We got the franchise tax for Texas in there. That's in the right spot. We got boutique hub training. That's in continuing education. Dues and subscriptions. Okay, we got meals. Normally for meals, I try to look at if I see a giant amount in meals, I tend to ask clients like, hey, was that for an event? Just because it might go into more of an advertising category. Because right now, in the year I'm recording this, 2018 forward, meals are only 50% deductible. Meals purchased for advertising purposes, not necessarily like client appreciation, but like if you take out a client, which really doesn't really apply to boutiques unless you're a wholesaler who's trying to sell to a big boutique, I don't know. But if you're taking a client out for dinner to get their business, that is not a deductible at all. So, but yeah, but if you're having like an event where you buy all of your team pizza, that would be a 50% deductible. But if you were having an event where you had refreshments and you had everyone come into your boutique to check it out, that would be like more like advertising and marketing. So just putting that on your radar. Okay, so let's pretend you're the owner and you're going through here and you're like, wait a minute, these two $200 ones, I remember those. Those are actually job supplies. So it's really easy. All you do is double click here, and then you would move this to job supplies. Save and close. Yes. Yes. Done. Same here. That's it. So not all hope is lost when you find something in the wrong spot. Just fix it. Takes a few seconds. Now I will say QuickBooks Online, you can only do one thing at a time. Where you can, I would definitely recommend that you try to open up another window, like duplicate a window, because you can only do one thing at a time in QuickBooks Online. That's one of the reasons why accountants hate QuickBooks Online, because we're used to doing multiple things at once and comparing multiple reports. So it's a little more time consuming in QuickBooks Online, but the theory is still there. Okay, so we're going through just the fees. Person pays a lot to payroll fees. All right. So that's basically it. You're just going through to make sure things make sense. That there's nothing in a category that shouldn't be there. That's basically it. Now, some of you will get to the bottom and maybe see an account called Suspense or Ask My Accountant. It's very common when you use a bookkeeper, and it even can be common when you're doing your own bookkeeping, where you don't know where something goes or you don't know how to categorize it, so you put it in this holding tank. That's all Suspense is. It's a holding tank so you can ask somebody else questions. So with HarQuin, when we have questions, say a client writes a check to a person named Joe Smith. We don't know who Joe Smith is. They've never paid Joe Smith before. We put it in Suspense and ask, what was this for? So that's just a temporary parking spot for that transaction, so that we don't forget about it. Okay, so I hope that makes sense. So that's how you know the P&L details, how you know something makes sense from the previous report, the P&L standard P&L. You know, something doesn't look right, or wow, did I really spend that much on advertising? You can click that number and find out. But it's also a good auditing tool to make sure on a regular basis you're going through there and you not categorize something in the wrong spot. I will tell you that out of all, our over 50 bookkeepers, we have a rule that you never trust your own judgment, because humans make mistakes. So just because it's your business doesn't mean you're not going to make mistakes. So you always want to double check your work. Okay, the next one down is a year-to-date previous comparison. But instead of running it that way, I'm going to show you how to run all this out of the P&L standard. Here, because all of these are already in the P&L standard. And like I said, on QuickBooks Online, they dumb a lot of it down, and they don't give it to you as like a standard report, but you can run it with the customization. So I'll show you how to customize. Okay, so I'll say last fiscal year. So customize. So previous, if I want to compare this year to the previous year, I don't know if I have 2 years of data in this dummy file. I can say compare to previous year, and I can see the dollar amount change and the percent change. I don't have data. So let's look at this fiscal year to date compared to the previous year. Okay. January and February, because I really know that those ones are in there. Okay, so this is this February compared to last January, February, the difference, and then the percentage change. So that's really nice. You can see how much the dollar amount has changed and the percentage has changed. I know when me and my husband started our business, I was really encouraged to look at the net income changes, because when it was just us two and he had quit his job to join the family business, and I saw that we still had, even with his additional, without his additional income, we still made 1% more. I was very encouraged. Thank you, Lord. 1%, that's great. So it looks like they're doing 23.5% less than they did the previous year for those 2 months. Another way to customize this report, you can say previous period. So you can say, I don't think last month is in there. And I want to say compared to the previous period. This month versus last month. And then you can do the same thing. But I'm going to show you my favorite. So I'm going to get rid of all this extra stuff. I'll do last fiscal year. I'm going to show you my favorite thing. So my favorite thing to look at in here is the percentage of income. Make it pretty. This is really the report you're going to run in order to compare yourself to any other boutique or wholesaler. Because boutique A might have $2 million in sales, and boutique B only have $100,000 in sales, but boutique B is more profitable. Just because you have a lot of sales doesn't mean you're more profitable, that you're a better business. So what really comes down to is the percentage of sales. So I'll show you at the top what it looks like. So here's your total sales. That's 100% of the pie that we're talking about. So of the 178,000, so of the 100%, 6% of this boutique sales is spent towards job supplies. 6.3% is towards merchant account fees, and there's the percentage breakdown between different platforms. And then 29.2% of sales is going to purchase for resale, which that is a very important percentage that you can compare to other boutiques. For instance, if you have a percentage, I think what they try to say is 30 to 33% is supposed to be, you're doing good, especially if you have a brick and mortar. But the smaller you can get that number, the better. So say you had a 60% there, that means you're spending 60% of your sales on what you sold. That means you need to raise your prices immediately, like something's really wrong. So that these percentages are really, really beneficial. This boutique is spending 10% on payroll, 2% on advertising, which I think they say that needs to be, on average, a little higher. Some people say 5, some people say 8 to 10. Rent is normally a big one, so there's another 10% to rent. But that way you can compare yourself to other companies and not have to go dollar for dollar, because dollars don't really mean anything. Like I said before, we see a lot of profitable boutiques, and some of them don't have a huge amount of sales, but they know how to work the money that they are spending, and they are very profitable. So normally the big hitters are purchase for resale, what you're spending on your sold inventory, rent, advertising, payroll costs are normally what the biggest money wasters. Now I know there are not money wasters, but money things to watch to really see if you're overdoing it. Like if you're putting out too much. And I will say that there are some people who have high payroll, but it's because they're able to maybe relax and not work as much. So if you have a higher payroll because you're not working very much and you like that and that's your goal, so you can spend more time with your family or whatever, then that's good. But if you're working like a dog and you're not paying yourself and your payroll is still like 25% or higher, either start paying yourself and maybe lay some people off, or it just has to make sense. So you need to really compare yourself to other people in your same industry, and you do that by percentages. I'll show you a couple other little things in case you're curious on what some of these other ones mean. We'll be hitting the balance sheet up next session. You as a boutique owner are not going to use the P&L by job. That means like by customer, the profit and loss by customer. You're not tracking that data. I don't recommend you do. That'd be a lot of work for very little data. But I did want to touch on what a class is in QuickBooks. Both QuickBooks Online and Desktop have it. I think QuickBooks Online more the premium versions have it. But basically, let me explain what it is on a more obscure industry. So say I was a plumbing company and I wanted to know how well I was doing in residential or commercial. I would code all of my transactions, my income and my expense if it was residential or commercial, so that I can run a profit and loss by class. This one might even make more sense to you. Say I'm a property manager and I have 10 properties. Each property is going to be set up as a class, and I'll record my rent income and all my expenses by property so that I can run a P&L by property to see how profitable I am on each property. Yes, this is one business, so it'll all roll up into one standard P&L, but it also will break that P&L into chunks so I can see how I'm doing by property. So I know a lot of boutiques have wholesale and retail. That would be a logical class division you can do. If you have multiple stores, multiple states, a lot of you already have a lot of this data on the income side separated in Shopify or your point of sale system, but you could go all the way into your expenses. And if it gives you the data that you want and only makes bookkeeping take a little longer, it might be worth it. So that's just something that a lot of boutique owners do not know they have the option to have. So I want you to know that's there. I love it. I think it's fun. I love it. Gives you a lot of data and even more fine-tuning your management decision reports. So I hope you guys enjoyed this. If there's any question that I didn't answer so far, please shoot us an email. I'd be happy to do an additional follow-up video to answer any questions that are still out there. Thank you so much.